What's up, team? It's Chuck with Traders War Room, and I got a great weekend training special for you. We're going to talk about TA versus EMH. And real quick, TA, we're talking about technical analysis, and EMH, we're talking about efficiency markets hypothesis. And we're going to dive into each of these. We're going to go over some charts, and I'm going to base a case for which one I believe has more relevance in current market conditions and more so the type of traders that most people are. And I think you're going to enjoy what I got for you, and make sure you check the description out because I got links to all the topics and social media platforms and online brokerage there so that you guys can get spun up on anything you want to learn about. Now, as always, we're treading cautiously and we're treading carefully, but we're here to have fun, and so let's go and get it. Traders War Room wants to remind the viewer that all content on this channel is for education and entertainment purposes only. You are responsible for every move you make within the stock market. Tread cautiously and tread carefully, but have fun and go to war. So when we're talking technical analysis, we're going to use Investopedia for this one because I like how they break it down. But basically, technical analysis is trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price, movement, and volume. Long story short, you're looking for patterns within the history of the underlying stock. And if there's a pattern or there's a trend, they tend to repeat themselves. They don't always have to, but they tend to repeat themselves. And so there was a way to capitalize on movement and direction of a particular stock so that you can make money off of it. Now, this is important to understand that TA is not like fundamental analysis. When you're looking at fundamentals, you're looking at the company that's behind the stock. You're looking at earnings report. You're looking at management. You're looking at the future of the stock and the product and service that they provide. TA is completely different. While the fundamentals will go into TA, it's not the main point that you're looking at. You're looking at indicators on the direction of which way the stock is going to go so that you can capitalize with either a bullish or a bearish type of investment strategy. Now, please note that there's so many indicators out there and there's so much involved with TA that you're really going to have to do your own research because we cannot cover it all. But I wanted to use AutoZone to give you guys an idea of what I'm talking about when we talk about TA and how it can differ. So if we're looking at AutoZone, right, and the reason why I'm using this is because they got earnings coming up on the 28th, and we're going to try to notice to see if there's a pattern. But looking at the day chart from Friday, right, this is just Friday's day. We could look at this and be like, oh, this could possibly be on a downtrend because it started at a high, swept down to a low, and then kind of went into a consolidation with a little bit of uptrend towards the end. Okay. Maybe we're looking at a bearish type of formation and this thing's going to tank or something coming into the next week. But as we go into a different chart, we notice that when we look at the day chart from a longer, wide, more view, a lens, if you will, of more of the historical data on the stock, we notice that it's been in a bullish pattern for a while. And we see that we got 2 earnings reports, and every time after earnings it kind of did a little consolidation rolling up into earnings, even a little dip before earnings, and then after earnings it had a bullish run. And we see that with the first one there on the left, and then we see a bullish run, a little pullback, up, pullback, a little consolidation going into earnings, and then a bullish run going back up, and then a little pullback there as we're looking into May and the beginning of the end of April, and we see that little pullback, a little upsweep, another little pullback. And so now what are we thinking going into this next week? Well, I'll tell you what I'm thinking. I'm thinking that we're going to have a little bit of pullback, maybe a couple days, some consolidation, and then going into earnings, I'm thinking that we're going to have another breakout session either at earnings or the week after earnings. So if I'm going to put a play on this call, what I'm thinking is that we might have a run going up into earnings, but if I put an option on this, I'm not going to put my option in for next week. I'm going to try to get in my option for the week after it or possibly later in the month, because I'm going off of this pattern, and every time it's had an earnings report, it's went on an uptick for the next couple of days afterwards. Now the efficiency markets hypothesis kind of goes against TA, and what the EMH is saying is one of the main reasons that some investors choose passive investment strategies, and explains why rationale of buying mutual funds and ETFs are within their wheelhouse. And so what the EMH is saying is basically that all the known information that goes into the stock or that's about the investment security is already factored into the price of those securities. And that is the true no amount of analysis can give you an edge over the market. Basically, it's telling us that we cannot predict the direction of an underlying stock based off of anything except for what it is going to be because of everything that is publicly or privately given out as knowledge is already priced into the stock. And we see here one thing that technical analysis takes into consideration is rational and irrational behavior of the investor, but EMH doesn't require that. It says that individual investors will act randomly, but as a whole, the market is always right. In simple terms, efficient implies normal. An example of this is unusual reaction to unusual information is normal. If a crowd suddenly starts running in one direction, it's normal for you to run that way as well, even if there isn't a rational reason for doing so. And well, that's where we kind of get that meme type of stocks, or those high sentiment stocks, those AMC stocks, those GME stocks, those BlackBerry stocks type of thing, was from the big push and everything. But it was just random. There was no rationale into it. It's just the stock was running, so people were going into the stock because it was running for whatever reason. Now, the understanding that there's three forms that EMH has: weak, semi-strong, and strong. And when we're talking about the weak EMH, it suggests that all past information is already priced into the security. The strong form, or the semi-strong, implies that neither fundamental analysis or technical analysis can provide you with any advantage to seeing which direction the stock is going. And the strong EMH says that all information, both public and private, is priced into the stock. Therefore, no investor at all can gain any advantage over the market as a whole. Now, it does state that it's not impossible to get abnormally high returns, but this is not the norm. And it's basically saying that it's a 50-50, a coin flip. You're either lucky or you're a loser within the stock market. There is no, I knew it was going to do this and I got in, and so on and so forth. You either got lucky with it or you lost out. Now, I picked another stock, Best Buy, BBY, right? So we're going off of the idea that we can't predict the direction of this stock because it's just completely random, right? But when I'm looking at this stock and I have it blown out so that we can see a large view of it, and remember, TA is taking into account historical data, I'm noticing that there's a run-up towards earnings, and then after earnings, it drops. And then there's a short run-up again to where the dividend plays in. And then you have a run-up, down, up, down. And then at earnings time again, the thing crashes down until it hits the dividend time frame, and then it starts consolidating and edging back up on its way into earnings. We've seen this pattern repeat itself 1, 2, 3 times with this particular stock that's on the screen. So why would this be any different, where we have a run-up going on to the 27th when they report their earnings, and then after earnings we have the next week or so we're going to have this selling off and people are going to take profits while it's running into its dividend time frame, where we'll probably see it increase. That would be something that I would be thinking, yeah, that's a pretty good bet that this would be a play that would probably pan out, because we've seen it happen 1, 2, 3 times in the past. Every single time that they have earnings, it dips and then it starts to rise again towards dividend, and then after the dividend play, it starts to rise up again and make higher highs and higher lows on its way to earnings, and then it dips off. So definitely I'm seeing a pattern. And I'm seeing that it's not just random action. I'm seeing people taking into account of that. And this is why I can't fully align myself into the idea that EMH is the way it is. Because I believe that anytime you're dealing with money and stocks and businesses and things of that nature, there's some sort of emotional tie and rational and both irrational ways that are dealing with the stock. It's not just random, it's not just algorithm bots telling you what's going on. These are real patterns and trends that you can identify. And if we can identify patterns and trends within a stock chart, then if we go back, we can see where it's done some consolidation and it's done its pullback, and it should be primed to either go up or down based off of technical indicators. And so that's where I'm more in line with TA as a basis for my particular choices and stock picks when I decide to get into something for either a short play or a long-term position. So I'll wrap this up with one of everyone's favorite stock to look at, and until recently, it's had some recent dips, but Apple, okay? Now, looking at this stock, Ben, can you honestly tell me that there's not a pattern of predictability within this stock that you, as a retail investor, could play and be pretty confident that you had a winning strategy going into it? I mean, look at that. Every time there's earnings, it's rise. Every time there's dividends, it's rise. Now you see a little bit of pullback, but that's normal in a stock as it's gone on a rise. But that is an uptrend pattern. And just the fact that we can identify that it's an uptrend pattern tells us that somewhere in its history, there was a way that we could have got into it. There was a pattern somewhere, and that we could have been successful with this particular stock, which is why I can't align myself with the EMH, because I'm looking at this stock and I'm seeing this thing and I'm like, oh, if I would have got in this, a year ago, where would I be today? That's something that is a pattern and a trend that we can use to our advantage to make sure that we get in at good buys. And that's where you hear the coin phrase buy the dip on certain stocks, because these good stocks, when everything aligns, the fundamentals, the technicals, everything of that nature, you can pretty much know with for certain that this particular stock, this company, is going to be something in the future, and it's going to go nowhere but up. All right, guys, and look, just to wrap this up and give you guys a clear understanding of where I stand, my bottom line is that I believe TA is real, and it can give the investor an advantage when getting into a day trade, a swing trade, or position. I can't fully align with the EMH because just by identifying a trend, which we did, we showed a couple different charts and we saw trends, we saw patterns, and just by identifying those, tells us that there's a pattern somewhere within that stock's history. And to give you guys an idea of where I stand with particular TA indicators, I like to use volume, money flow, and I like to use catalysts that provide emotional sentiment towards the stock one way or the other. And just by adding that emotional fact into it also takes EMH out of the discussion, because now we're talking about emotion being brought into it and not just some algorithm bot that already has priced everything into the stock and it's just moving randomly like a coin flip, 50-50 chance. Sentiment is real. We've seen it before. We know it exists. And therefore, my stance is TA trumps EMH all day, every day. And that's my opinion. But definitely do your own research. Check the description out. Get the links there and make sure that you spin yourself up on this, because both of these have valid reasons for being out there. There's a reason they're out there, okay? Because they're valid, But I align myself more with technical analysis rather than going into the EMH. So I hope this video gave you guys some content. I hope you guys enjoyed it. Definitely hit the link. I need those subscribes. like and share, and I'll see you guys on the next one. Later.